Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on the Dixie today. It's November 8th, Tuesday night. And so we have, we've got the first couple of days of action for the week, and it's been just downside, right? So we made a new low on Monday, and then today we made another new low, just kind of reinforcing that downtrend on the daily. And in terms of the cycle count, today we're starting day 9. So Wednesday, I should say, will be day 9. We have that potential top here on day 5. And again, you can kind of quibble about these cycles. You can call this one big cycle, right? So 15 plus 17 would get you to, what is that, 32 days, right? Or these are two short cycles, 115, 117. The point is, we've made a big swing high here, and it's a lower high versus these two, which are like a double top, which are a lower high to this, which is to say we've been making lower highs. Now, we haven't been making vicious lower lows. It's been a little bit more of a range, but now we may be beginning that sort of down, that trending move lower. And this is where you could use puts on UUP. That's the ticker symbol for an ETF. Pretty good. Like the IV is really sort of cheap. So a good way to sort of catch the downside. Now, as we've been talking about, this whole rally is being held up by this candle here from the week of September 19th. And the low from that candle is 109.355. 109.355. We are right now at 109.664. So that's the level we're going to be really watching. That's the first breakdown level. 109.355. So, and if you think about where we are on the cycle count, this would be week 23 actually. So the top has been on week 17, and then this is week 18, 19, 20, 21, 22, another, that, like, my God, 20. So this is week 23. And again, we're trying to kind of break down outside of this kind of consolidation range that we've been, more or less. So that's going to be really interesting. That's what we're going to want to watch for. And what does that look like on the monthly chart? The most important thing that we want to be watching. So on the monthly chart, we have this inside month that's inside another month, right? What I mean by that is you have this month, which is inside this month. And so we opened inside this month. You can see that's this range from 113.922 to 109.6. What is that? 109.524, right? And so, wait, no, is that right? So 109.535, right? And so we're not quite below that yet, but we did test that level. And so that's the first place we want to see a breakdown, and then we need to break down from this big candle. So in the same way that weekly candle was holding up the whole rally, this candle is month 20. This is your monthly chart. This is now, we're thinking about the 3-year cycle. And so again, 3-year cycle, easy math, 36 months. This is month 20. And once we go below the low of this month, which marks the high, that low is 107.680. That would give us a monthly swing high. That is the first thing that you would need to start to suggest that we have a 3-year cycle top. Anyone that suggests we have a 3-year cycle top before we have a monthly swing high, you're just speculating, you're guessing. Even with a monthly swing high, we can always get a reversal back to the upside. But that's your first criteria. You see this 3-year cycle top has a swing high. They're all swing highs. That's how it works. That's how you get a decline. You need a swing high first. And so as long as we stay above, again, I'll say 107.680, and that's a long ways down, right? In percentage terms, because the Dixie is a currency. Now, we obviously have the CPI number coming up. We have catalysts that can give us a really big move in either direction, really. Again, observe, we could break up the range, right, to that 113.934. Again, that's obviously a distance from here to the upside, but volatility works in both directions. But that is the key level that you want to be watching. And I'll flash over to TLT because This is, a major bond index, and it is in collapse, free fall. So we just had what looks like a really feeble daily cycle bounce, and now we're declining into a daily cycle low. So that's rally on day 1, 2, 3. So it looks like we topped out on day 3, and then 4, 5, 6, 7, 8, 9, 10, 11. So that would put us on day 11, and we're already declining into the daily cycle low. That's pretty bad news, and that suggests to you that bonds are going to continue to get sold, which means this thing continues to go lower. And if we look at the monthly chart, you can kind of see it looks like we're like, there's like a magnet down to this 87 level. We're up here at 94. This thing's already down over 30% for the year, which is kind of unthinkable. No one thought this kind of massive bond index can do that, but it did just that. And so there's no reason why we're not going to come test this level. It looks like it is very structurally important. I mean, look at these wicks, how they respond. And then, you have all-time lows on the table. No reason we can't get that in this kind of environment we have. So that could be a good short. Again, at this point, you're really kind of shorting in the hole, to be clear. But I think of this as more of a harbinger, a signal for like the broader lack of health in the market, because this is what the Fed really thinks about, cares about the bond market. And this kind of price action is going to cause the bond market to seize up, is my sense. So that's your rundown for the Dixie. Those levels on the monthly are everything. The weekly gives you a bit of a preview, a bit of an early warning signal, but you've got to be observing those levels and try to keep the emotion out of it.